1. The illusion of safe stocks and bonds. For generations, financial advisors pushed the 60-40 rule. 60% stocks for growth, 40% bonds for safety. It sounded simple, balanced, and reliable. But here's the harsh truth. That model was built for a different era, not for the unstable global economy of 2025. Inflation is quietly destroying purchasing power, making so-called safe returns meaningless. Bonds, once trusted as a cushion, are now failing to protect wealth, often delivering negative real returns. Meanwhile, stock markets can shed 20% of their value in a matter of weeks, wiping out years of hard-earned savings. Retirees who once relied on this formula now face sleepless nights as volatility becomes the norm. This isn't fear-mongering. It's acknowledging the reality that traditional safe isn't safe anymore. That's where XRP and IRA becomes a modern hedge. Unlike bonds that stagnate and stocks that ride political and economic cycles, XRP operates as a utility asset, moving money across borders at lightning speed, already embraced by global institutions. By introducing even a small allocation of XRP into your retirement portfolio, you're not abandoning traditional assets. You're reinforcing them with 21st century resilience. The 60-40 model may have worked in the 1980s, but in today's fragile system, it leaves gaps too wide to ignore. Retirement isn't about clinging to outdated playbooks. It's about adapting before the system forces you to. Diversification with innovation, like XRP and IRA, is how smart investors protect their legacy in an era where safe has lost its meaning. Two, why diversification is no longer optional retirement used to mean security. A pension, some savings, and steady bond yields. But today, that illusion is crumbling. The world is more volatile than ever. Markets swing unpredictably, interest rates shift overnight, and currencies face devaluation while the cost of living rises relentlessly. If your entire retirement plan still depends on traditional stocks and bonds, you're not protected. You're exposed. Diversification isn't just a financial buzzword anymore. It's a survival strategy. True diversification means introducing assets that don't move in sync with the traditional market. Assets like XRP Roth IRA allocations. While stocks depend on corporate profits and bonds rely on interest rates, XRP is tied to utility. Global cross-border transactions that function regardless of market sentiment. By placing even 5% of your portfolio into a crypto IRA XRP structure, you're not gambling, you're shielding. You're adding a layer of defense that operates on a separate system outside of Wall Street's turbulence. This isn't speculation, it's insurance. And when that small slice of your portfolio rises independently while stocks fall, it cushions the blow. It buys you time. It protects your long-term strategy. A modern retirement plan can't afford to be fragile. The markets of today punish rigidity and reward those who adapt. XRP and IRA isn't just a crypto play. It's an intelligent move toward future-proofing your legacy. The old way is no longer enough. Diversification is no longer optional. It's essential. 3. XRP versus stocks. A different risk profile. Stocks have always been the cornerstone of retirement portfolios. They represent ownership in companies, tied to earnings reports, economic cycles, and political headlines. But here's the catch. When recessions hit, when inflation spikes, or when global events shake confidence, stocks tumble, often dragging down entire retirement accounts in the process. XRP, on the other hand, isn't just another company share. It's a global settlement layer, a digital asset already being used by banks and financial institutions worldwide to move value across borders quickly and efficiently. Its strength doesn't depend on quarterly profits or Wall Street's latest earnings season. Its value proposition is based on adoption, integration, and utility. That's why including crypto IRA XRP in your portfolio doesn't mean abandoning stocks. It means balancing them. While equities thrive on corporate performance, XRP thrives on solving inefficiencies in the global financial system. One is cyclical. The other is infrastructural. Imagine your retirement portfolio like a ship. Stocks are the sails. They catch the wind, but they're also vulnerable to storms. XRP is like the stabilizer. It doesn't eliminate risk, but it helps balance the ride and keeps you from capsizing when markets crash. By adding even a modest allocation through a XRP Roth IRA or XRP retirement account, you're not rejecting stocks. You're reinforcing them with an asset that thrives where Wall Street falters, in innovation, efficiency, and global adoption. In today's market, resilience doesn't come from tradition. It comes from balance. And XRP gives your portfolio the balance that stocks alone cannot provide. 4. Bonds are no longer the safe haven. For decades, bonds were considered the cornerstone of stability in a retirement portfolio. They provided steady income, predictable yields, and were seen as the anchor to balance out the volatility of stocks. But the financial landscape has changed, and bonds are no longer the safe haven retirees once trusted. Today, bond yields barely outpace inflation, and in many cases, they don't even keep up. That means your purchasing power is eroding quietly, even if the bond appears stable on paper. Worse still, when interest rates rise, as they have in recent years, the value of bonds collapses. What was once meant to be a cushion suddenly becomes a liability, leaving retirees dangerously exposed. This isn't a temporary shift, it's a structural problem. Bonds were designed for a different economic environment, one where inflation was low, interest rates were steady, and global debt wasn't spiraling out of control. That world doesn't exist anymore. Here's where diversification changes everything. By adding even 5% XRP inside your XRP retirement account, you don't eliminate bonds completely, but you reduce your reliance on an asset class that has stopped working as promised. Unlike bonds, XRP is not bound by central bank policy. It thrives on real-world adoption and utility in global payments. Think of it as modern risk management. Instead of putting blind trust in bonds, you balance them with a small allocation of innovation. That hedge may be the difference between a fragile retirement plan and one built to withstand the storms of the future. 5. The power of small allocations. One of the biggest mistakes retirement investors make is thinking they need to bet it all to see real change. That couldn't be further from the truth. In fact, history proves that small allocations to asymmetric assets with the potential for outsized returns, can transform portfolio performance without taking on overwhelming risk. This is where XRP shines. A simple 5% allocation to XRP in IRA Roth IRA retirement plans has shown the ability to improve portfolio resilience over time. Why? Because XRP doesn't need to dominate your portfolio to make a difference. Its upside potential means even a small slice can offset weaknesses in traditional holdings like bonds or underperforming equities. Think of it like insurance with upside. That 5% is your safety valve, the piece of your retirement strategy that can multiply when global adoption accelerates, while the rest of your portfolio remains focused on stability. If stocks or bonds falter, that XRP allocation can provide the growth spark that keeps your plan on track. The beauty of asymmetric assets is that you don't need massive exposure. A modest position is enough to capture exponential upside while keeping 90 to 95% of your retirement account conservative and steady. This isn't reckless, it's strategic. By weaving XRP into your crypto IRA XRP or XRP retirement account, you build a portfolio that doesn't just survive. 6. ETFs will reshape the playing field. Exchange-traded funds, ETFs, are coming. And when they do, the rules of retirement investing will change forever. Just like Bitcoin ETFs transformed access for mainstream investors, XRP ETFs will open the floodgates of institutional and retail demand. But here's the reality few are talking about. ETFs are not designed for you to win big. They're designed for Wall Street to profit. With ETFs come fees, restrictions, and gatekeepers. You won't own XRP directly. You'll own a product wrapped, repackaged, and managed by financial institutions who decide the rules. That means less flexibility, higher costs, and most importantly, you lose the first mover advantage. The investors who position early with XRP Roth IRA and crypto IRA XRP accounts will already be holding the asset itself, not a Wall Street derivative. They'll capture the upside before it gets sliced into fees and shared with latecomers. By the time the headlines scream XRP ETF approved, the price advantage will already be gone, and millions of retirement investors will end up buying after the breakout, not before it. This is why timing matters. ETFs will reshape the playing field, but only for those who wait on the sidelines. For those who act now, direct ownership through a XRP retirement account isn't just about growth. It's about freedom. You control the allocation, you own the asset, and you position yourself ahead of the tidal wave. The question isn't if ETFs will come. It's whether you'll already be positioned before they change the game. 7. Tax-advantaged growth. Inside IRAs. Growth alone can build wealth, but tax-free growth can transform it. Too many investors hold XRP in regular accounts, celebrating every price surge only to watch a large portion disappear to taxes. Every gain becomes taxable, every trade another burden. That mistake compounds over decades, robbing retirement investors of the wealth they worked so hard to build. Inside a crypto IRA XRP, everything changes. Gains don't get eaten by taxes. In a Roth IRA structure, your growth compounds entirely tax-free, allowing you to keep every dollar of appreciation when you eventually withdraw. In a traditional IRA, you gain tax-deferred growth, meaning you don't pay until retirement, often at a lower tax bracket. Either way, the tax shield becomes a multiplier that ordinary accounts can never provide. Over 10 to 20 years, that difference isn't small. It's massive. We're talking about potentially thousands, even millions of dollars preserved simply because you placed XRP in the right retirement vehicle. And with the asymmetric potential of XRP, where small allocations can yield exponential upside, the tax advantage isn't just important, it's game-changing. That's why serious investors are building their XRP retirement accounts now, leveraging structures like the XRP Roth IRA to maximize what matters most. Not just growth, but the ability to actually keep what you earn. This isn't about avoiding risk. It's about avoiding unnecessary loss. Growth plus tax protection equals unstoppable wealth-building power. If your retirement plan doesn't already include tax-advantaged XRP, you're leaving your future on the table. 8. The retirement investor's dilemma. Every retiree eventually faces the same question. Should I diversify my IRA for the future, or stick with what I know? For decades, the answer was simple. Stay with stocks, sprinkle in some bonds, and ride out the years. But 2025 is different. The world has changed, and relying 100% on the old assets isn't protection anymore. It's exposure. The dilemma is clear. Stay locked into outdated models that no longer deliver or adapt to a financial landscape built on innovation and global adoption. Adding XRP and IRA Roth IRA retirement plans doesn't mean abandoning the familiar. You're not throwing away stocks or bonds. Instead, you're enhancing them by introducing a new pillar of strength that moves independently of traditional markets. XRP offers something neither stocks nor bonds can deliver: utility. It powers institutional payments, cross-border settlement, and financial infrastructure already being used worldwide. That means it's not just speculation. It's infrastructure-level diversification. Think of your portfolio like a house. Stocks and bonds are the walls and roof you've always relied on. They've kept you safe in the past, but cracks are forming. Adding crypto IRA XRP is like reinforcing the foundation with stronger materials. 9. Timing matters more than ever. In retirement investing, timing doesn't just influence returns, it defines them. Yet most people wait. They wait for headlines. They wait for confirmation. They wait until everyone else is already in. But by the time you read XRP ETF approved or institutions now accumulating XRP on mainstream news, the window of optimal entry will have slammed shut. This is the brutal truth of markets. They move before the public catches on. The gains don't go to the people who react, they go to the people who prepare. If you've ever typed into Google, "Is XRP a good retirement investment?" the real answer is, only if you move early. Delaying your decision could mean entering after the price surge, when XRP is repackaged into ETF products with fees, restrictions, and less upside. But acting now, by building your XRP Roth IRA, XRP retirement account, or crypto IRA XRP strategy, lets you capture the value before it becomes expensive. The future doesn't send a calendar invite. You don't get a reminder before the markets shift. And retirement is too important to leave up to chance or last-minute panic buys. Strategic allocation today can be the difference between riding the wave or chasing it. Timing isn't about guessing the top or bottom. It's about positioning before the crowd arrives. If you want to be early, not late, this is your moment. Don't wait until diversification becomes luxury. Make it your advantage while it's still affordable. 10. Take action. Before the system forces. Every generation faces a turning point in how wealth is built and preserved. For decades, it was enough to trust stocks and bonds. But today, that model is eroding under the weight of inflation, volatility, and systemic change. If you continue relying on outdated strategies, you're not securing your future. You're surrendering it. Here's the reality. Stocks and bonds won't vanish, but they won't save you either. They can't shield against currency devaluation. They can't protect against collapsing bond yields. And they won't give you access to the innovations reshaping global finance. That's why even a 5% allocation to XRP in your retirement account is transformational. Inside a crypto IRA XRP or XRP Roth IRA, that small position offers more than just potential growth. It offers stability through diversification, tax advantages through proper structures, and exposure to innovation that's already being adopted by institutions worldwide. The system is shifting fast. You can either prepare on your terms, or be forced to adapt when it's too late. Fear, doubt, and hesitation are what keep most retirees stuck in fragile portfolios. But the winners, they're the ones who act before the headlines, before Wall Street gatekeepers.